How can you profit by investing in the stock market? Hello and welcome to BSE's Investor Education Awareness Series. I'm Siddharth Zarabi, and today we will talk about how you can profit from investing in the stock market. So while the stock market can be a good place to invest your disposable income and save for the long term, remember it is risky. You may know this if you read the newspapers or your friends talk about it, about how their stock investments are going up and down each day. But the thing is, no matter where you invest or put your money for the future, there is always some amount of risk. There is absolutely no investment or asset in the world that guarantees you wealth, profits, or benefits without any risk. And in that regard, the stock market is just another risky investment instrument. And like every investment, the stock market also requires you to make sensible and practical decisions when buying or selling. But be ready, and remember, this is important, be ready to go through a roller coaster ride with a strong stomach and positive emotions. Perhaps you will now ask, why invest in the stock market when there are other modes of investment? Why take that risk? Why that headache? Well, let's say you have savings in a low interest fixed deposit or a bank account. If you keep your money there, how will you be able to buy a house, retire early, or travel the world, or simply create a legacy for your children with that money? So here is why we recommend investing in the stock market. Number one, if you look at stocks on a historical basis, from a historical standpoint, investors who have stood firm despite market ups and downs have created immense wealth with success. They've done this through patience, dedication, and a slow yet steady understanding of how markets and the share market works. How you grow your wealth in the stock market is purely in your hands. By this, I mean that you can control your investment by spreading how and where you put your money. For example, you can distribute your money, you can allocate it to bonds, to exchange traded funds, into blue chip shares, mutual funds, and other categories to make sure that all your money is not put in one basket. Remember, you should not put everything into one basket. The third point, the stock market is for investors across all ages. But remember, if you are young, if you have entered early, you have time on your hands and you have a much higher risk appetite, and therefore the stock market is really meant for you. Remember, if you want big returns, large returns, you will also have to be prepared and you will need to take the risks that come with it. And before I leave you on today's episode, once again, some great expert advice. Take a look.
So we must emphasize on the word investing. And I must say that you can only profit from investment, stock market, by investing. You know, the skill of trading and skill of buying and selling is a very, very difficult and a very rare skill. But if you are an investor and if you have your own money which you have not leveraged, and if you can keep that investment for a longer period of time, then stocks have proven to be one of the best investment. If you look at the history of even last 25 years, with so many uncertainties of 2008, 2013, now 2016, 2020, Corona, and even before that, stock markets have given anywhere between 13 to 15% annualized compound returns, even on a Sensex, right? Now, if you compare this into any other form of investment, whether it is bank deposit, whether it is fixed deposit, whether it is investment in any kind of bonds or tax-free instruments, this is proven to be much more superior. And I have no reason to doubt that whether the next 20 years will be equally rewarding. But the important thing to note here is that you have to make investments, you have to have the stomach to digest the volatility, because these returns do not come in a linear fashion. It is not that every year you will make 15%. There will be years when you may lose 20%, and there will be years when you make 80% return. But it is so difficult to identify which year is going to be good and which year is going to be bad. So this is why you just need to be investor. And again, the best way to invest for normal public is to do systematic investments, so that you are in a position to ensure that you are able to participate in the market at all levels.